Recording. Oh yeah. So as I was saying, Peter, welcome.
Thanks, Oscar.
Yeah, whoever is new in here, I want to welcome every single one of you to the family.
Sure.
You're gonna learn a lot of new things with me, and hey, Dennis, hey Ari, what's up, man? You guys are in good hands, so don't worry. Hey Tristan, what's up, man? Tristan, Paulo's here.
Oh, cool.
Briscoe, awesome, and Ahmad. Okay. All right, so guys, this is gonna be a short webinar. We're not we'll talk a little bit about the charts, but this is actually a webinar more about on risk management and compounding. I see some, well, not some, but I saw a couple of people struggling with this. So I haven't made a video on this, so I'm gonna do it right now. So it's gonna be short, sweet, and simple. All right. Okay. Who else just joined the party? Okay. All right, guys. Let's look at this real quick. Okay, so whoever has their mic on, can you cut it off, please? Thank you. Okay, so my boy Julian, he's been killing the Brinks trays. For those that don't know what those are, these are right here. You see, this is a Brinks tray. This is a beautiful Brinks tray right there, man. Hey, man, go take it to the Blueberry or Mayo, right? Beautiful. That's the Brinks tray. Okay. So here's the thing, guys. Whenever you have these kind of setups, like the Brinks, like here's another one, out the agent box, right? 1, 2, 3 vectors. They held the level for 30 to 90 minutes, right back in, get out, Okay, when you have these kind of setups or multi-session W, remember Mundo, the one I called, I think it was on Tuesday, this one, a multi-session right here. I think it was this one. I don't know, but you see, like when you have these kind of setups, guys, here's the thing. Some of you guys, well, with these kind of setups, my point is that you can be dead sure that this is going to pay out. And if it doesn't pay out, well, of course, that's what you have your stop loss for, right? Okay, so in this example, this multi-session, right? They failed to take it out. Okay, good. So here, with your risk management, to be in general, let's say you have $100 account. This is my recommendation as your teacher. If you have $100 account and you want to flip it, not fast, but you want to flip it consistently in a slow but profited manner, I suggest you on these trades, you are guaranteed about 89-90% accuracy that these will pay out. So with that being said, I want you to, on these, you can place a 20-cent lot on these. 0. Or what is it? A micro, a mini? I forgot what is it, but 0.20 cents or 20 cents out of 100. Okay, out of 100 for these setups. Okay, for these powerful setups. Okay.
Did you get 20 cents?
0.20, yeah, for these setups. Wow. Do you think that's a lot?
I mean, yeah, but I'm really not expecting a lot of drawdown.
Oh, no, of course not. But see, this is why you have your stop loss. Like, I know it's probably like, dang, that's a lot. But when you have these setups, like, you know they're going to pay out. But if it doesn't, that's why you have your stop loss here and you're out. But, okay. But this is what I want. You don't have to listen to what I'm saying about that. You can just go with your 10 cents, like no big deal. Okay. All right. Now, another thing, some of you guys, I don't know who was it, but they were over leveraging their account. They, I don't know what lot size they put, but it went against them and it almost took out their account. So here's the thing, guys. And this actually has to do with your emotions also. When you're like, damn, is it going to go my way or not? Should I hold? Should I close? What should I do? Like, and you start getting stuck to the chart, which is exactly what I don't want you to do. You get all like this when you place a big lot, right? Like, example, if you have $100 account, you put a 50 cent, and you're like at minus 40, you're definitely going to be staring at that chart, right? People get scared because I've noticed that their lot sizes are big, right? If you had a penny lot, you're not gonna be looking at it. If it hits your stop, well, right? Like you're not gonna be so emotional about it compared to a 50 cent, right? Like, big difference, right? So this is where my risk management comes in. Okay, I did say 20 cents. That's what I use for if I had $100 account. Okay, you can, to be safe, you can put a 10, 12 cents. All right.
Catchy.
Yeah.
Can I add on to that? For UCAD on Friday, I was putting a standard for the very first time, and I was unsure. Like, I knew the setup was golden. They already issued the hammer, but as soon as they did it, like I put the standard on there, but I was just so nervous. Like, it was slowly developing contracts going up and down and slowly creeping up. You see it right there in the red?
Yeah, this one, right? Or yeah.
Yeah, it's that one. And I was just it was right after oil. Oil had that really big drop there.
Mm-hmm.
And that was the OPEC news. And then there was the reversal right there. I was waiting for it, but I was just so sketched out, and I kind of TP'd too early before it rocketed. And I could have made so much more if I wouldn't have done that. I didn't trust the trade. And so I'm trying to get more confident in trusting that trade.
I understand. I completely understand, Julian. So whenever you're like that, bro, I personally use, remember what I've said, the 2-hour rule. If you're not in profit, like in substantial profit in 2 hours, just close, man. Why break your head over it? So let's see how many candles actually pass by. I'm assuming because your interests are so good, it was right here at the tick. So let's just say it was right there. All right. So 15, 30, 45, 60, 75, 90. That's 90 minutes right there. So you're like, okay, it's so far so good, right? How many pips is that? Let's see. Let's just say your entry was somewhere around here, right at the closure of the hammer. You're up 35 pips. You could actually took profit, but hey, now here's the thing. Because I know some of you guys like to hold your trades. You saw this fat red candle. Now you're scared. You're like, what the hell, right? Now here's the thing, Julian. You could have used. You see all these pins to the water, like grabbing, right? Because remember what I've said, that they do these pins on purpose because people take shorts, right? What do technical traders do, right? They sell the bounces off the moving averages and so on and so forth, right? So this is why they do this. So who uses the MM method, you already know, okay, so I see the pins to the water, but they're not breaking it. They're not breaking the moving average. So your trade is still safe. However, if this would have kept going like this, Jillian, I would have closed out, because worst case scenario, right? I've said before, right? They can have a freaking explosion or oil. I don't know. They have explosion, a freaking nuclear bomb. They drop to hell, right? And we don't want that to happen, right? So with that being said, either 2 hours, or I don't recommend it, but here, obviously 2 hours is like right here. So if you wanted to wait a little more, and you see this green candle, and then look at this. So you see this shift, the zone. They got the hell out of there. But the reason that they do this is because they have those moving averages there, right, to trick the retail traders, right? So, so next time, Julian, if you want, look at your moving average. As long as it doesn't break. Remember what happened with GJ? It dropped to hell once the moving average wasn't holding it no more. So if you want to hold this, and you see this, and then you see this green candle right there, that's kind of also, you can use your TDI, right? Like, you see that little pinch. Remember what I said about that trade, that straightaway, right? It pinched right here, pinched right there. You're in right there, actually. You got in right there, okay? So this is how your TDI comes in handy also, okay? You see,
I can just add more buy.
Exactly. So this is pretty much that 50-50 also, that 50-50 I talked about. You see that pinch, that as soon as the RSI line, your green, crosses the signal line, red, blood in the water, you're in right there, buddy, right there, okay? So you have one open here, you have another one here, take it to the Mayo, man, short and simple, and your trade is over right here or wherever, right? Or once it consolidates, it's over. You know,
it's so funny that you say that, because as soon as it, like, I put my take profit at the Mayo, it hit that take profit. I thought it was going to go higher. It went maybe like 4 pips higher, and then it started dying down. I was like, damn.
Yeah.
Right there.
Exactly. So this is okay. So speaking of that, Pierre, remember what happened with let's see, where's GJ? Let me look at GJ real quick. Remember that random spike? Oh, right here. This one. This is another trade that happened. I think remember it spiked out of nowhere, bam, and then it closed, and then it started slowly dropping again, right?
Yeah.
Yeah, this trade happened, I think, on Thursday? But, okay, so here's same thing, right? Multi-session W never took out the low, right? Keeping, right? In mine's is purple, but you guys have blue. But, okay, the LOD was here, never broke, right? I've talked about this already, so I'm not going to go over that. So LOD, right, you take profit. You could have, if you had a big lot, I think I took profit right here. I had like a $4 lot, so I took profit right there. But, some of you guys, if you want to hold, you can put your trading stop right there, just to protect your profits. Pin the blueberry. You see how it pinned it and then it dropped? It dropped. And that's what you're referring to, Jillian. You see how as soon as it hit like 3 pips, then it started dropping,
Yeah. And if you recall, actually, I was on the sell on that. That took me by surprise, the whole thing. I don't even know why I wasn't thinking about the fake move out of Asia. And I had sell all up and down that green candle. But you know what? I won, even though I was technically counter trading against level 2.
Okay.
It did go down, and I knew it was going to go down, and I won.
Okay, good stuff, man. And also, I haven't talked about this, but is that wick considered which one, Mundo? Hold on, Julie. Let's see. Are you talking about the one to the blueberry? Are you talking about this one right here? Let's see. Yes. Mundo, to answer your question, bud, that could have been actually the 800 pinch, right? The 800 bounce, because, okay, so now this is where I'm going to talk about real quick. So whenever your blueberry is like this in a straight, like this, if you notice, a lot of reversals happen when the blueberry is in the middle. All right, so if you want to write this down, feel free. Mostly a lot of reversals like that, you see all these brinks, like you see another brinks right here, beautiful. You see this right here, outside structure. You got your M right here, gold, right? You see how all of these happen in a tight range, you can get a lot of reversals here, okay? I don't recommend them if you're still practicing, but once you kind of get the hang of it, you can feel free to take these whenever the blueberry is like this only, okay? This is not, you don't count the levels on this one. Like, okay, let's look at UJ. Same thing on UJ. All right, it's only when the blueberry is like right in the middle, right? This is your 4-hour trend, right? You don't have to look at the 4-hour because you know where the trend is at. It's like this, right? So you see how when the blueberry, as soon as it starts going like this, you see all these reversals, right? You see this M right here, and then you see all these. You see this? You see how they reverse. You see? Waiting for the breakout, right? When usually breakout traders get rewarded here. So as soon as this breakout, let's say it just breaks here, right? And then it does this. This is where we get in, right? We don't fall for this because we're not breakout traders. So, right, we're looking for that false move week beginning. We're looking for the signals to line up, right? Right, Jillian? You see how when the signals line up, they pay out, right? So this is what I want you guys to do, okay? So, yeah, so what my point is, when the blueberry is like this, there's going to be a lot of reversals, okay? So whenever you're like, man, what the hell? Okay, so what level am I? What is this? Okay, so 1, 2, no. you just expect this. Expect this. Expect reversals like this when the blueberries like this. All right. Okay. Let's see who joined the party.
Expect it to do what? To reverse when it pins it, you mean?
Expect these reversals like this. You see how it's reversing all over here because the blueberry, it's in the middle. It's like this. So expect a lot of Brinks trades pretty much.
Okay.
Expect them, okay? All right. Joined. Hold on. Let's see. iPhone. I don't know who you are, but welcome. All right. Okay, so now that's taken care of. All right, so now let's continue with what I was going to show you. All right, so, oh man, someone's mic is kind of loud. All right, thank you. Awesome. All right, so, as I was saying, I was going to keep it short and simple today, guys. I want you to trade this week and show me. I think some of y'all showed me the homework. I'm going to go over them, guys. I've been kind of MIA because I had to do some stuff, but I'm back now, back in business. So if you guys send me some homework, I'll look at it. Don't you worry, man. I think Julian and I think Scotty and Tristan sent me a couple of homeworks. I'll look at them, okay? So don't think I forgot about them. Okay, so with this pretty much means that with 2% risk at your stop loss, right? Okay, so remember what I said, that your risk management can be this is kind of the technical way how to lot size with the calculator. So I believe is you have to multiply your account times 0.2 and divide it by, I think, by 2 or something. That gives you something like that, guys. But if you want to do that, feel free, so you can have a certain risk management for your account, right? Okay, so with 2% risk at your stop loss, one can lose 3 trades in a row. You can lose 3 trades in a row, guys. So what I mean by that is if you take second leg M's and W's and they fail, and let's say they extended and you got stopped out, you can lose 3 of these and still have enough margin to come back and negate the loss with just 1 trade. All right, I'll talk about that right now. Mastering the HOV and LOD entries, right? Jillian, you're doing a pretty good job at those. So can lose, 3 times in a row, and with just one winner, guys. One winner of 50 pips, they can negate the loss. Example, a solid LOD HOD entry can warrant, right? I said 23 pips, right? But, once you're really confident, you can just make it less, 15 pips stop loss, right? 3 stop outs. If you have 3 stop outs, right, that's what, times 3? You have 3 stop outs of these, that's minus 45, right? Now, 1 win of 50 pips, right? If you take 1 and then this actually pays out and it hits your 50, usually it's your Mayo, or right? You can net out 5+ pips. Okay. All right. Very. Let's see. It's all right, shorty. It's all right, buddy. Okay, so you can net out 5+ pips, guys. Okay. All right. Now let me show you another picture.
Can I ask you a question on that appropriate lot sizing?
Yeah, what's up?
So if I've got 1,500 in an account, is it safe to use a full standard on the next Brinks trade, like, for example, London coming up?
How confident are you, Julian, about placing a standard? Are you gonna be like, I don't want you to be like,
I'm gonna let it go. I'm confident in what I can see, and I'll call it in the chat too when I see it.
Okay.
I'll call it out, and then I'll take it at the right place. Like my entries, if you look at UCAD, that's right behind you. Like, it was actually earlier, which really sketched me out. It wasn't the red box, it was the blue box. So, it was just kind of,
okay.
I'm confident in the Brinks trades. As long as there's Brinks coming up, tomorrow, basically tonight for London, right? But that's going to happen, right?
Yeah. Okay, Julian. So let's just say you get stopped out at minus 15. That's how many? Minus 150. Can you take the loss, Julian, of one minus 150?
How much is that?
If you place a standard and minus 15 pips with a tight stop loss, that's a pretty good stop loss, by the way, because that's recommended 15 or 23. If your entry is like at the wick, you can get a 15 pip stop loss. If your entry's kind of like, like you wait for confirmation, I recommend 23 pips. So let's just say, Julian, if you would have got stopped out like on this one, let's just say you took a trade here, a standard, you got stopped out at minus 150. Now, right, so this is where it comes in, right? What I'm talking about. If you get stopped out 3 times, that's what, minus 450. Now, here's the thing. Since you will have more equity, so that's what, 1,100 in your account left. Yeah, you can still play standards. Now, here's the thing. If you get just one trade, Jillian, one trade that gets your 50 plus, you're going to be net positive.
How much?
So let's say, minus 450. So if you take one trade, so that's 500. You're going to be positive plus $50. Plus $50. So just imagine one trade, you lost 3 trades. You're like, dang, now here's where it comes in. I don't want you to place a higher lot because you lost. Okay. I don't want you to do that. I want you to place the same lot you started with, because if you place bigger lots and you keep losing, you're going to burn your equity and you're not going to be able to come back with the same lot size. Okay. So if you play standards, don't go on the second one and place a 2 standards, because it's like, man, I got to get it back like right now. So I'm going to double it and I'll get double profit. What if you get stopped out again? So the 2 lot is 15 pips. What is it like? $300. So you're going to be negative. Damn, my math is really horrible, by the way, but 300 minus 1. Okay. So that's 450 in 2 trades.
Yeah, fuck that. I'll just wait for the close of the hammer, and then I know that it's going my way.
Okay, good. So I guess you can do that then, Jillian. If you're very confident. Okay, let's see who just joined the party. Edgar. Welcome, Edgar. Not sure who you are, buddy, but welcome. We're talking about risk management, and I'm going to talk about compounding in a bit. Okay, so, right, the basic idea is that as you hit winning trades, you increase your lot size. And as you hit losing cycles of 3 or consecutive stop outs, right, what we just talked about, you diminish your lot size, right? You diminish. Of course, you're not like, you lost 3 trades. You're not going to keep on placing the same lot, because you're eventually going to burn your equity and your margin, right? So you have to lower it a little bit. Does it make sense? And when you're increasing your lot sizes because you have consecutive wins and you have equity growth, right? It makes sense, right? Like, who doesn't want to place bigger lots, right? But with that comes control and discipline. Managing your leverage is the key to sustain equity growth. I'm going to talk about some scenarios right now. Without this last element of discipline, it is quite easy to blow accounts. Trust me. I've blown so many without me over here trying to place a standard on a dollar account. Yeah, not worth it, man. Waste of money. There is no reason for a single loss nor even 2 consecutive losses to rattle us. Why? Because we have risk management, right? It's not going to bother us a lot, right? Now, if you're placing 3 standards on the freaking $1,000 account, you have 2 losses, you're down minus 600. You're like, dang, like that's going to get you like, dang, if all emotional, you're going to start beating your wife, kicking your dog. Like my teacher says, yeah. That's Steve Maldo says that, kick your dog, beat the wife, Yeah. If we have a strategy to manage risk, we can simply come back clear-minded and can trade without fear when the signals reappear, right? Bring trades, your straightaway trade, whatever trade you're comfortable with that man, this is my trade. This is the style I have. Sile, apparently his favorite trades, I think, are the straightaways. Those are the trades that pay him off, focus on those and, just kill those. Okay, let's see what they said. I do that. Leave my kids in the Hey, Tristan. Hey, you're not alone, bro. You're not alone. Okay. Anyways, guys. Okay. Let's see. I'm gonna show you. Okay. Okay. Now here. Which one was it? Okay. Now here's the scenarios I was gonna show you. So this is following the risk management of 2%. I did say 20 cents, by the way, in the beginning, but those are for multi-sessions. If you want to say, now screw you, cash, that's too much money that I'm putting on. Okay, that's fine. That was just my suggestion because, I think those are the trades that pay. I'm not saying to place bigger lots over that. Okay, I don't want you to over leverage your account. Understand that? Okay, if you want to use a 2% risk, that's fine. That's actually pretty good. That's actually safe, and you can do that. All right. Okay, now so this is a 2% risk scenario, right? I told you to calculate this on Google or something for whatever your account is because I don't know what y'all's accounts are. Okay, so let's say here you have a 15 pip stop loss and you have a plus 50 for take profit, right? Okay, so here's your first trade. Your first trade plus 50, you get stopped out the second one, right? Okay. You get stopped out 3 times. You get stopped out twice, you have a win. 3 stop outs, a win. 1 stop out, 1 win. 2 stop outs and 1. Okay, now here's the thing, guys. You see how you only have 7 wins, but you have more losses than wins? Like, you're like, what the hell? How is this possible? Right? But here's the thing, guys. Numbers don't lie. Oh, darn. Speaking, I was trying to make this short and I already have it will end in 10 minutes. Great. Okay. So you see what I mean? The math here makes sense, right? If you have a 15 pip stop loss and plus 50, you see how this is actually a net positive equity curve, right? You have more losses than wins, but following this plan, guys, is freaking awesome, man. Like, you don't have to be the best trader to make money. I think there was this guy, some guy named Richard Dennis. I don't want you to do that, by the way, but he had like 95% bad losses, but he's still a millionaire off of Forex, I think, if I'm not mistaken. I'll show the picture later, but he was a horrible risk management, I think, if I'm not mistaken. But okay, anyways, off topic. So yeah, 400 million. Thank you, Peter. 400 million, exactly. Okay, so you see how. Okay, so this is 7 wins and 12 losses. You have a net positive equity growth. You see this growth, right? Okay, now let's show you another example. Okay, let's just say you're even worse. Okay, I think it's okay. Oh, okay. Now here's this one. Okay, now this is 8 wins, 11 losses. Okay, so for this one, we have a tighter stop loss. Well, actually a bigger stop loss, minus 25 pips, plus 50 pips of take profit. All right, so same thing, right? You start off plus 50, minus 25, plus 50. You have 3 stop outs consecutively, and you have 2 positive, 1, right? Okay, and the list goes on. You see how you still have a net positive equity curve, right? Right? That's what we want to be, right? We want to win. We don't want to lose, right? Of course. So you have 11 losses and 8 wins, but you're still positive. If you have $1,000 account and you have this, you still are positive like 1,600 or whatever, right? So this is what I mean. 8 wins, 11 losses. It's pretty good. This is pretty good. I know there was I have another one here. Should have done slides, but it takes forever.
What's the number of losses or percentage where you just say, all right, I'm gonna walk away or go hang out with the family or do something else? Like, what's your number or the number suggested?
What do you mean, like as if in like what if you get stopped out or if you have consecutive wins?
Like consecutive losses.
Consecutive losses. Okay, good question. So okay, well, actually, you see. Okay, look at this scenario real quick. Okay, this is let's just say this is in 2 weeks. Okay, so this is, you see how you have 14 losses here and it's only 6 wins.
Yeah.
Okay, so the first one, okay, let's just say today, let's say this is Julian. He gets his first take profit, brings trade, beautiful. Now he has 4 consecutive losses. 1, 2, 3, 4. You're like, dang. Okay, now I'll answer your question right now. Now, when you okay, this doesn't usually happen, but if it does, if you just it, so whenever you have too many losses and you start getting emotional, guys,
Mm-hmm.
I want you to stop trading. So either you're thinking this, either you're trying to revenge trade. I'm not saying you are, but some people I've seen them do it, man. I have to get my money back, man. I have to pay bills. I have to do this. I have to, okay. So now that's one reason. Number two is because you're like, I'll get it at the next one. I'll place a bigger lot. And next thing you know, you lose. So now you're minus 400. So here, my point is when you're getting in a desperate moment. I don't want you to get desperate. I want, if the signals don't appear, like I've said it multiple times, do not take the trade. Do not take the trade. All right.
Mm-hmm.
If there's a Brinks trade and it's beautiful, if like a Julian trade, man, you cannot miss it. Take it. If that's your trade, if that is your trade,
Take it. Gotcha.
take it. If that's your favorite trade you want to take and that you feel comfortable with, take it. Take it without fear. Take it, always your stop loss. Okay. I know some people say, oh, stop losses are, they're for cowards, or I don't use no stop loss, man, or man, stop losses are for pussies, excuse my French on that one. But some people say that, I understand why they say that. Well, some of them is because it's because if you have a stop loss right here, man, market makers are gonna hit your stops. Like that's stupid. So I have one now, but I already taught you guys how to keep it away from them, away from the grasp of the market maker. Right? I already told you all that. So let's see for the Yep, exactly, Mundo. Exactly. Okay, so when you feel like you're having a bad day, though, just relax, take a breather. It's happened to me before. Don't worry. It's happened to me before. We're not perfect, but yeah, my point is, just relax, come back the next day. Don't let this get inside of you, because once it gets inside of you, it's like a freaking grudge, like a living nightmare. Like, man, I see a W. You start seeing M's and W's everywhere.
Everywhere, yeah.
You start seeing them everywhere. So you're like, oh, okay, so this one's going to pay out because Cash said this. You get stopped out, and then you're like, what the F, Cash? This is not working out. Yeah. Your method is crap.
So you start forcing the setup. Yep.
Yeah, exactly. Wait for the setup to come to you. That's what I've taught you guys. Wait for the signals to come, and when they come, you attack them, right? Because we want to pocket their money. We don't want them to pocket our hard-earned money, because those guys are freaking filthy rich, okay? We are the ones that are trying to provide for our families, for our kids, for our, for whatever we have to do, okay? So I want you to take the highest probability setups because of this. You see, last week, I think I said this like 3 weeks ago too, but a lot of people blew their accounts last week too, by the way, because they don't know about what we know, guys. They don't know about the LOD and the HOD. If you tell this to a technical trader, oh, I can pick the bottoms and tops, the highs and lows of the days, they're gonna freaking think you're crazy. I've heard this since I started using this method. People have told me, Cash, what, LOD, HOD, what the hell are you? They think the boogeyman. They think the freaking market makers are boogeymans, that they're not true, that they're fake. I believe that they're real. I've seen them manipulate the spreads. I've seen them do those extensive stop huns, right? They hit your stops. They laugh at it because they put it where 90% of the retail traders put it, right? So this is, so yeah, I'm getting a little off topic, but that's what I mean. We want to take the highest probability setups because we don't want to lose money. We want to make money. That's why we joined this business. Dang, I got less than a minute left. Variations on the theme. Exactly, Jillian. Exactly. Guys, if you want to join my next webinar, I'm going to be hosting it real quick again. Still going to be talking about the same thing, risk management. If you want to hear what I have to say, you feel free to go. I'll post the recording. I'll be back, guys. Put the other code right now.